Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates, whether it might come something from the economic calendar or headline news or geopolitical. Sometimes it gets even more confusing, whereas market sentiment changes and good news is now bad news and vice versa. So we try to give those explanations and give you the direction of what the market is doing and what they're looking for. A little bit about myself is I'm a loan officer. I do work with the National Lender. We lend in all 50 states, so if I could be of assistance for any refinance or purchase needs, please feel free to reach out. We'd love to be able to assist you. But more than that, we'd like to be a resource for you. We like to, if you got any questions to pose, please feel free. We will be more than happy to try to get the information you're looking for. Without further ado, we'll just jump right into the report here. We'll start off with the economic calendar today. Today's actually a big day today, and we'll touch on that in 1 second. But first, we'll start off with this very minor report, which we get every week by the MBA. It's called the Mortgage Loan Activity Report. It kind of gives us a gauge as to if we're having an increase or decrease in loan applications being taken. And on the purchase side, it did increase from last week, as you can see here. However, the refinance side continues to decline here. Now, we got the first of the jobs data today, and that is the ADP private payrolls numbers here. So for the month of April, so March was actually revised slightly higher from 455,000 to 479,000. Forecast was coming for 396, and it came in a little underwhelming at 247,000. Now, this index doesn't always give a direct correlation to what the Bureau of Labor Statistics, which weighs much more heavily because that is the government, where this is private payroll. So that one will be the big one for Friday. But even bigger than that is news later today, which will be the FOMC. The FOMC will be meeting, wraps up their two-day meeting, and approximately about another hour will be giving their announcement. We do expect a 50 basis point hike. We do anticipate them beginning the the balance sheet reduction. So we'll be seeing how they proceed going forward here and how aggressive that they might become to fight inflation. So that's going to be where investors are going to be looking at. We already know those, but we're going to see how aggressive they're going to continue. And will this 50 basis point be the norm going forward, or will they even increase at the 75 basis points? So that will be the next question on there. So time will tell. We'll find out later today as to what they plan to do going forward here to the road. We also got a little bit more information, or not more data here we'll look at, and this is the ISM non-manufacturing PMI. This gauges the services industry for the month of April. Anything above 50 is considered expansion. So in March, we had a 58.3. Forecast was supposed to be a slight uptick to 58.5, and it actually went downwards to 57.1. Kind of like its counterpart the other day with the manufacturing. We did see a decrease in April on that as well. So let's go ahead and take a look here at what's going on with mortgage rates today. We did end up closing downwards yesterday. We were in positive territory when we first did this yesterday, ended up closing down about 8 basis points. And then we see today, we're currently down about 13 basis points. As you can see, we're even down much further here as a result as well, but we're off the lows from earlier today, and now we're down 13 basis points. Now, stocks are also down. Why is this? Well, they're kind of getting ready for the Fed to provide their announcement. They want to kind of put themselves more of a conservative stance. So there's been more of a sell-off than there is anyone buying rate at this time until they hear from the Fed and find out what direction or how aggressive they're going to become with them. So going forward, so here's the volatility today, as you can see here, how today it looks today. We've right after the basket, we start selling off. We kind of subsided at the lows, and it's been kind of sideways for most of this morning, as you can see here, for the last several hours here. And then, of course, afternoon will probably be pretty volatile. Once we get the Fed, we can go one direction. We can go in either direction. So depending on how the market's going to take their news. We did reach 3% today. We did touch off the 3% mark. Right now, we're just hanging right around 2.99 right now, just under 2.99 on the 10-year Treasury. And if you look down here, we're down to 2.809. So we're just got a lot more of uh, a spread. We just keep seeing the 2 and 10-year keep increasing its spread between the two. So that means the curve just keeps getting more and more inverted right now. All right. Lastly, we'll touch on what mortgage rates are doing on the conforming loan limit size and what they are in terms of loan limit size. So and they do have points built into it. So a 15-year is at 4.88%, and a 30-year is at 5.54% right now. So if you guys got any questions, please feel free to reach out. If we can be of any assistance, again, reach out. But if you guys can help us out, we would greatly appreciate it if you guys could share and like these videos. If you guys do like these videos, we hope that they do help you out and find these useful. We do appreciate you folks. Thanks so much for watching. I look forward to see you guys tomorrow's video. Bye-bye.